Hey, what's going on, Side Nation? Good evening, good afternoon, good morning to you, or wherever you're at in this world. Coming at you with a quick market recap of today's action on SPY. This can also apply to ES, which is futures, and also SPX because they move pretty much identical, right? The difference is obviously a extra decimal, but it doesn't align. So I want to put that out there saying that 420 on SPY is not 4,200 on ES and SPX. Although they are going to be close, it's not a direct one-to-one translation. It might be 420 on SPY, and you might be 41.95 on SPX, and maybe 42.05 on ES. But the point is, they all move in the same general direction. So if SPY is going down like this, uh, ES and SPX will be moving down as well. So what you see right now in front of you is SP or SPY on the daily the daily chart, but it's a 5 minute time frame. I want to point this out because this morning in pre-market, I give my community, you guys, a game plan of what I'm looking at, where I'm looking for price to go, what I'm thinking price is going to do, and basically key areas and key patterns and key things I'm seeing to give you all an extra advantage. I do want to say none of this is financial advice. It's for educational purposes, right? So you do what you want with it. I am giving you a recap of what I've seen based on what I presented. So I told you that there was a inverted cup and handle pattern going into the market today. And look, when I draw these patterns, it's not going to be exact, meaning that it's going to hit every single price target to the exact, right? This is just giving us a visual awareness of what potentially could be happening, right? Obviously, price never came back up to the top side pivot, right? It broke the intraday pivot, but then fell back down, and it did hit the downside pivot and broke it and failed and came back up again. It is just a visual awareness so that you are ready for it when the market comes, right? And everything you see here is what I always provide you, right? I provide you key levels and key pivot zones. So this this upward trend line is basically the trend line for the rising wedge pattern we had. You can see that it broke out of it today in pre-market, and then we have a falling wedge pattern that we were drawing. Obviously, it broke out of it and then came back in and then broke out of it again. But nonetheless, the point is we had these lines here, these trend lines here, and they all have a relevancy to at least how I trade. Now that you've seen the lines and you see where they're coming from, you can understand. What you see on the screen is these things called pivots, right? These are pivots that I create, not something that you can get from an indicator and whatnot. This is based on what I see data doing and where I think it's going to have a potential shift, either a consolidation until a move is made. So if it hits it, it's either going to break out and continue in the direction that it's going, or it's going to bounce off it and reject and go the opposite direction. So again, look, in pre-market, I already told you that we are expecting the bears to continue this momentum. You might see the bulls try to push it up. I was hoping they would push it up to the top side pivot because obviously they wanted to reclaim 420 in any hopes to get 425 and 430. They obviously did not do that. And I was like, they're going to try to do that, but we still are going to expect the bears to push it down, at least to the downside pivot, just because that's where momentum's going. Look, pre-market, it broke out of this rising wedge, right? And then it hit this sell side liquidity that I gave us, right? This is where we have sellers waiting. Their stop losses are here. Those or buyers stops. They got long here. They have to stop somewhere in here. So we were looking for that to be taken out, and we were starting to take it out during pre-market. But the key thing to note is we broke out of this rising wedge, right? Breakout, obviously don't go in right away because, right, any pattern you play, wait for the breakout, retest, fail to break back in, confirmation, and then take it. So look, that could have been it, right? That could have been your first play. First play would have been, easy play would have been to the rejection, or actually that's second. First play would have been up. We knew it was going to go up, right? We said that bears or bulls definitely want to try to get this up, and they made a nice attempt, right? Went to 419.24. We didn't get to 420, but it was a good attempt. We were as low as 418 flat almost, right? So they made $1.20 move. So you could have capitalized on that. If you would have gotten in long here, this would have been a quick 30, 40, maybe 50% play for you. The key thing I want you to note is this. Look where price rejected. Literally on this X, right? The downward trend line from this falling wedge and the upward trend line from this rising wedge. And it literally rejected off of that, right? If you weren't comfortable getting there, that's fine, right? So that was gonna be, and one thing to note, this was actually a outside bar, right? It was engulfing, right? It took out the high and then came out and took a low. So it was a bearish engulfing. That sets us up for a three, two down, two, right? So it's three, two, one, right? Um, if you didn't get in on this one, that's fine. You could have waited for this retest, right? It came back up and look, it tested the day's low. This is the day's low. Rejected off it to the cent. You know, if you didn't get on this one, well, now you have a 2-1-2 combo, right? So you could have been like, okay, I'm gonna wait. I'm gonna wait for the break of this, and my stops could be at the high here. This right here was get your sell side liquidity. It hit that line, and then it came down. So your entry could have been here, and then you could have just been like, hey, my stops could be at the top high of the inside bar, which is at 418.35, and then you could just kept riding down. Every time it moves down, you just shift your stops. Move down, shift your stops as high, move down. And these are 5-minute candles, so you have a good cushion, right? You know, and then you could have rode this thing all the way down. In all honesty, right about here. This would have been where you exit, right? Because once you hit that downside pivot, you can see it started hitting it and it came back up. It actually went from 416.3 all the way to 417.21. That's a almost dollar move. If you were going to play that balance, you could have made 20, 30, 40% again. So this is the area you would have gone out. You know, most people would have gone out or scaled out, and then you would have had stops, you know, moved your stops up, and then eventually tried to milk it to the bottom. Most people won't do that. What I wanted to point out was this. So not only you can see now that we're zoomed in, you can see that we literally rejected off that on the X, which is you know, pretty exciting for me, just because you know it just shows that you know it's not a fluke. We do this day in day out. I give you something that always pans out to the cent almost. You know, nowhere else you get to see this, right? People will tell you to go long or short and give you a area, but you know, to call it to the cent, to the dollar. You know what? This was the high of this candle was at what 419.21, 22 maybe, and this X is at 419.8. So what 2, 3, 5 cents maybe? You know that is literally 99.9% accuracy. Anyway, look, if we shift time frames, it's gonna change the outlook a little bit. So look, now we are on, you know, now we are on a 10-minute time frame, right? This was a 3 right here. This engulfed this one, 3, 2 up, and 2 down, 3, 2, 2, right? Again, now this is on 15-minute time frame. So look, now we have a, you know, we have a 2 down, 2 up, now 2 down, right? 2, 2, 2, right? Combo. Again, if you didn't want to take it off this rejection, you could have gotten on here, right? Once it, you know, once the 15-minute candle pulled back up, couldn't break the up past the sell side liquidity, you could have gotten in. Another interesting thing is, look, the 30 minutes, right? 30 minutes is even better. The reason why is because 30 minutes was a hard fail 2 up. Look at this, right? This was a 2, you know, 2 down, 2 up, and now 2 down, like 2, 2, 2 combo, right? Here's the thing: when you look at the size of this wick, this is a 30-minute candle. That is a very powerful candle telling us that, hey, freaking sellers are here right now. They are in control, right? We're on a 30-minute time frame, we're not looking to go long on this, right? If you may have been able to go long somewhere into the middle of this candle, but the likelihood of it, you know, going up past this was not very likely. Just the fact that we had the intraday pivot, we had the trend lines, momentum was down. It was more likely, hey, once we broke this low, you should have entered on the 30-minute candle, and you could have wrote. You can see that this was a, you know, if we went in here, this would have been $1.59 move. Very nice move, powerful move for you. So that's what I'm saying. Like, it's very, you know, all that's why I love the strat, right? 2-2-2 combo, momentum was down, time frame continuity was down, everything, right? It was just beautiful for it to see and play out. And then the same thing once we got down to, you know, the downside pivot. Yeah, we broke through it, but again, it's down. Pivots are the same as, you know, your patterns, trend lines, right? You have something called false breakouts, right? Broke out, not really good strong confirmations, you know, going to the downside. Therefore, you know, I was like, okay, it's just hovering, and it just could not break it. And eventually it came up. And where you could have gone long would have been on 10-minute. Look, even if you get here, we're back into the pivot. This was my confirmation candle to go long right here, the 10-minute hammer. That basically shows me that the buyers are here right now and they were pushing it up. And you know, you could have waited. You could have waited for the confirmation, break out of the pivot, and get in here, and you still would have had a nice, solid run. again, right? So this could have been a good, $1.66 move, right? This is on the 10-minute, right? If we go to the 15-minute, you will see that this was a 3-2-2 continuation. Same thing with the 30-minute, 3-2-2 continuation. So it's just a lot of things to kind of look at, and not people are not thinking about it. And hopefully, once you start seeing this, you'll see more. Even on the 5-minute, we had this hammer, right? We had this consolidation, basing. Sellers try to push it down, boom, got rejected, and now you had an inside bar. Take it long and up, and then your stop would have been somewhere around here. Never stopped you out, just kept going up. Anyway, look, this inverted cup and handle played out so far. We are down, and futures is actually going to be opening in about 11 minutes from the time I'm recording this. We're going to see if it's going to continue down, or we're going to see if it's going to pull up. But the point is, if you combine everything that we give out every single day, you have a very high probability of making great trades. So again, utilize this information to learn from it, to add to your knowledge and your skill sets. Thank you for your time. Hit the like, hit the subscribe, follow the Twitter. Thanks. Bye.